Good afternoon, guys. JR with Secure Metals with your week-ending technical look at the precious metals market. Today is Friday, July 19th, 2013. It is 2:07 p.m. Eastern Standard Time. So I just wanted to get this quick video out here and give you guys some pivot points here to pay attention to. This is your daily gold chart here. Currently, as a matter of fact, let me draw some Fibonacci retracement levels here so we can have a clear picture of this market. So currently gold is testing your 50% Fibonacci retracement coming from the November 2008 low. Okay, currently testing the 51% Fibonacci retracement. Again, bullish engulfing candle here. That's fairly positive. So we could see the metal continue to go higher and possibly test this 20-day moving average coming down. And at that point, I would expect a little bit of resistance before coming down, possibly retesting the 1305 level and continuing to go higher. Again, this is the weekly chart. So again, it could be some time before that happens. In the same respects, on the daily chart, though, the daily chart not looking as good as the weekly chart. We are above the 20-day moving average. A move below this level here, roughly 1270, 1268. A move below this level here and below the 20-day moving average would potentially bring us down a little bit further. I personally wouldn't want to fall below roughly around the 1240 area. But as of now, if we take a closer look at this chart here, really we don't want to fall below this this line here. This is the line that's keeping us up. This is the short-term uptrend line here. And as of now, what we're doing is we're forming a little bit of a triangle here where this is flat, and of course this is coming up. So again, a move above 1300 or above this 200-day moving average, a move above 1305 would be fairly bullish for us, and then we would target at least 1350 to 1360. A move below this line, we would look to find resistance I meant up here. And a move below this line here would most likely bring us back down to the low 1260 range to test this 100-day moving average on the 4-hour chart. Again, the daily chart, stochastics are still on the strong side, but again, it does look a little bit overbought. So we could see a little bit of retracement, but again, at this point, really, we are in limbo. As we can see here, basically, we've been trading flat for the last couple of days, for the last week, and until we can go above this level or below this level, no real clear indication. I can tell you that the Bollinger Bands are beginning to contract, which do suggest a breakout to either direction. On the silver chart, this is your silver chart. Sorry about that. This is your silver chart. Really, it looks like we are looking to target this downtrend line here at around $20 and a half, 20 and a half, or maybe 20 and a quarter. Again, Bollinger Bands are contracting, so we would expect a breakout to either direction, the upside or the downside. A move below, currently testing the 20-day moving average, and at this point, again, just like gold, really, you don't necessarily want to go below 1920. 1920 will bring the possibilities of us coming back down to the 1860 range, testing this lower Bollinger Band here, and a move above 2020 would probably signal a test of the 50-day moving average. But again, at this point, really very hard to tell. Again, silver is trading just like gold, really on a flat range here between this level here, roughly around $20, and this level here, okay? So really, only time can tell where we're going here. But again, ultimately, on the weekly chart, we do look, it does look very nice and bullish. Again, stochastics are very oversold, so we would expect a move back up, but again, potentially we can come back down to the 1818 range. I don't expect new lows at least anytime soon. 1820, I would expect from here for us to go higher and at least try to test this 20-day moving average before the market decides if it's going to push it back lower or continue to go higher. But again, Bernanke did speak this week, and really, he had a lot to say. Blah 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 blah. Quantitative easing, quantitative easing. Nothing really changed. Mixed signals all day long, and that's really all what Bernanke's all about. So at this point, really just waiting to see what the market is going to hold for us, and that's what the silver market. Let's look at the platinum market here. This is your platinum chart. I like this 20-day moving average moving curving to the upside. That's very positive. Like I said on my previous video, I really like platinum right here. This would be your support. Let's put some lines here. This would be your support here at this point. So if it comes down from 1420, 1380 is really the price that I like. But again, this 20-day moving average, nice curve to the upside. And also we have to keep in mind, I think I went over this on my previous video. This is the line that looks like it's looking to test. Again, this moving average moving up slightly, pointing to the 50%, pointing to the 50-day moving average, looking to target the 100-day moving average. And again, if you're in platinum, I'm actually thinking about taking some profits out on some of my platinum here, but I don't know. I think I'll let it go till Monday, see what happens. But again, I'd like to really take some profits here at around 1460 on my longer term positions. Obviously, I'm not going to take any profits on that end. Let's look at Palladium now. So this is your Palladium. Palladium looks to be on the oversold side a bit. Big rally to the upside. I actually just closed all my Palladium positions roughly at around the 740. Right now it's at roughly 745. Again, technically speaking, I'd like to see if this is going to go over this line here. Again, right here might have been the better time for me to sell, but I wanted to at least lock in some profits here on my Palladium. Obviously, I didn't want to wait for this market to turn around. But again, I think Palladium long term is a very, very, very good buy. But the only thing I'm afraid of here on Palladium is that even though it looks really nice, if we look at this parallel line here, yeah, I mean, this is a huge range, and I at this point, I'd like to see if this is going to continue to go higher, or if it's going to retrace. Move to the downside. I would urge everyone to start picking up some Palladium. Palladium is just a great metal to be in right now. Big in the automobile industry, and again, looking to go much higher with inflation. Okay, I'd like to put the dollar chart as well. Let's look at the dollar chart. Here is your dollar chart. Your dollar chart right now, again, trading in at around 82.5. Again, I spoke about this. This formation that we have called a broadening formation. So again, I expect the dollar to continue to decline here in the short term, which would be positive here for the metals. But again, stochastics are a bit oversold. But again, still really just like gold and just like the metals, really the dollar is in limbo at this point. We'd like to see if it's going to come back up over 83 and continue to go higher, or a move below 82.5, and we'll see the dollar index continue to go lower. So again, at this point, we really just have to see what the market is going to do. Again, Bernanke didn't really state anything that we didn't already know. The Dow Jones is looking pretty bullish right now. We just broke out of the previous high, which was 15.5, and currently we are retesting this level. I would have liked to see the Dow Jones rally a bit harder, but it didn't, which could signal a little bit of It could signal a little bit of indecision, and if it doesn't continue to go higher anytime soon, then we'll probably see a dip back down to the low 15,000, possibly even high 14,000s. And at that point, I would urge anyone who hasn't gotten in to get in, because I do expect the Dow Jones to continue to go higher. Being very careful though, because again, we have already gone over this broadening formation on the Dow, and again, it just doesn't look too good. I would be very, very, very careful because of this broadening formation. It doesn't look too good. But again, this is a monthly chart, so it could take about a year for this to even come together. At least for it to even start coming together, meaning hitting this high. Possibly hover around here for a bit before we see a big sell-off. So I would expect this within the next year and a half to 2 years, possibly by the end of 2015, for us to see a big move to the downside here, especially when interest rates start to go up. We'll see the Dow Jones come back down. And the last but not least, this is your gold versus Dow. We can clearly see that the correlation between gold and the Dow has turned a lot more positive than it once was, or at least back in early 2013, when we saw just a complete opposite correlation. It does look like we are starting to build a positive correlation again. As you can see, the gold is moving up, and so is the Dow. And here we saw the Dow dip, and we saw gold dip also. So really, it does look like as of June, early June, it looks like we are beginning to see a positive correlation between the Dow Jones and the gold prices. All right, guys, I just wanted to get this out there so everyone can have a good idea of what type of pivot points we're looking at. So again, 1300 level here for gold, very important level here for us. If I can go over 1305, 1310, I'd be very, very comfortable, and I would look for a move. I would look for a move to the mid 1300s. Okay. All right, guys. I hope you guys have a great weekend, and bye bye.